Hi everyone, I am Adam from Trade with Precision and welcome to IC Markets Market Commentary. Let's have a look at what happened over the last week and what the implications are for the week ahead. Starting off here with the dollar index, we are back up after a relatively bullish week for the US dollar, testing this $100 level, right? It is still stuck in the range and ranges can be incredibly difficult to break out of. We have had multiple attempts over the last year. So let's wait until we see whether it ultimately does break out or whether it is rejected. So this coming week, that is a key factor that I'll be looking for that. If we have a look at euro dollar, I find this interesting because euro dollar is not sitting at the edge of its range. Therefore, it has more downside potential, which could see that dollar break out. GBP is the same. GBP here, cable is stuck within its last year's worth of range, and actually it still has downside potential before it reaches the edge of its range. Aussie dollar, US dollar to me is very interesting. It's an uptrend, it's pulling back. So of the ones we've looked at so far, even though Australian dollar, US dollar is pulling back, the trend overall implies that the Australian dollar is at least deviating and is quite strong relative to the US dollar. This is the chart we want to be watching. This is the dollar yen. The 160 level is kind of a line in the sand for the Bank of Japan. They have intervened here. That's what this arrow is, just pointing out that intervention. And this area here, this zone, is really where they are likely to interfere. That stronger dollar is likely to push dollar yen up into this area. Traders should be very careful that further intervention this week. I would pay attention to any news out of the Bank of Japan. We could see Bank of Japan intervene and cause a bit of a ruckus here. So be very careful with the yen crosses. This is the chart really that will potentially provide some big moves this week and not in a good way. Let's move on and have a look at gold. So gold has fallen through support here. It's broken down. The next level down here is around about the $4,260 level. We might get a pullback. We might get some lower time frame pullbacks and a trend continuation to the downside. Let's see. I'd be very surprised if we did manage to reverse back up above this level. It's possible, but looking at gold as well as silver, that is quite a solid breakthrough and a breakdown. And so for now, my expectation is that aside from intraday pullbacks, I expect this to attempt to continue down, certainly to the next key level. So for silver, that sits at $64.25. Then we have a look at crude oil. So crude oil has got lower highs coming in. It's got levels of support that it keeps testing. And actually for now, this downtrend is very much intact. We've got the 50, 20, and 10 geometry in a bearish formation. And for now, I expect this to come down and at least test this level, if not break through it, and test the 84, close to $85 level. Then we have a look at the global indices. Now, this is a weekly chart, and we've been quite overextended for a while. The Dow has got some very subtle divergence. So we've got a fresh iron price, we've got a bearish rejection candle, and we've got a little bit of subtle divergence on the momentum indicators. So what I'm looking for this week is a break of the low here and a potential retracement back down into these previous highs. If we have a look at the S&P and the NASDAQ, which are far more overextended, they've had a really big run, and it's one of the most aggressive in history for these guys. And we've now got this big red engulfing bar. I would expect to see that it's going to test this level of support and potentially break down. If it does break through this level of support, I'm looking for it to come back down into these previous lows, into the moving averages, around about that 7,000 level. US tech, you can see here, again, same thing, big red bearish engulfing bar, very overextended. And you can see fib levels here, retracement levels, the 382, 50, and 618. This area is a prime area for price to pull back to. If it's very bullish, it will do a minimum pullback to that 382 level and then attempt, I beg your pardon, to continue up from there. The furthest I would reasonably expect it to fall down to, if this trend is ultimately going to remain intact, is down to that 618 level, which has some nice confluence with the previous highs at 26,211. If we have a look at the Russell 2000, the reason I'm showing you this is it is small cap companies. The reason I'm showing you this is to show you that this correction that we're seeing is across the board, not just in the larger companies, in the large cap companies, right? So here with the UK moving away from the US, we are still stuck within a relatively tight range within an overall indecision triangle. So ultimately we could break down, we could break up, but there is no clear direction for this week. So day traders would be wise to stay away from that. We can compare this to Euro stocks, which has also been going largely sideways, some strong resistance there right now. It's also a weekly chart. So again, there just really aren't any opportunities that I can see that I would expect from the markets this week. I would exercise some extreme caution. And then the last one here would be Bitcoin, which has dropped through, found some nice resistance. In fact, the behavior of Bitcoin technically is perfect. It's behaving exactly as it should. A breakthrough support, a retest, and a continuation down to the next level. 60,000 here is that next level. If it breaks through here, it's heading down. The next level beyond that is 53,000. We may see, it's quite a big drop. We may see a little bit of a bounce if this level holds. But my expectation is generally for now that we will continue to see Bitcoin heading lower. Why do I say that? Well, because the monthly is now in a downtrend officially, right? And it takes a long time for trends to change. You can see here a very strong reaction there. This is a very important level, absolutely. This is also a very important level. Could it reverse here? Of course it could. There's the 50-period moving average. It could bounce off that. That is a possibility. But I just want to draw your attention to the overall bearish structure here. The implication leans at least 60-40 that this is going to stay bearish for a while and not just suddenly turn bullish. What I would have to see to believe that would be a nice double bounce or a strong test of support here and then a break back above these highs or change of trend in this area. So it's too soon to tell that right now. Bitcoin is bearish. I'm going to leave you with that, ladies and gentlemen. Keep an eye on that dollar-yen chart. Keep an eye on the dollar charts, dollar news. Keep an eye on gold and silver for potentially heading lower, crude oil as well. And the markets are still correcting.